Have you ever watched $15 billion in unrealized gains evaporate faster than a resolution on January 2nd? This week, Bitcoin didn't just slip. It performed a sell at any price swan dive that sent it screaming towards $60,000. If you're feeling the sting of a 20% portfolio haircut, you aren't alone, but you might be missing the holy grail signal hiding in the chaos. Today, we are breaking down why institutional giants are treating this crash like a clearance sale while retail is stuck meta-analyzing the exit signs. We'll cover the Gemini exodus, the software stock correlation, and the $40 billion mistake that nearly broke an exchange. Stick around to find out if $73,000 is the magic number to confirm we've actually hit the bottom. What's up? I'm Stocks and welcome to Stock Sprint. New here? One quick tap on the subscribe button will keep you in the loop. Get your friends to join the Sprint crew by sharing the video. All right, let's get to it. Bitcoin has had a bit of a rough week, erasing basically all the gains it made after the November 2024 election. We saw it drop from a comfortable position above $70,000 down to a low near $60,000. It was a violent move that Wintermute described as the worst single-day drawdown since the FTX collapse. When the phrase "sell at any price" starts appearing in OTC trader emails, you know the vibes are officially rancid. The CoinDesk 20 index lost over 17% of its value in just 7 days. But if you think Bitcoin had it bad, just look at the rest of the neighborhood. Ether dropped 22.4%, BNB fell 23.4%, and Solana took a 25.2% hit. It was a cross-asset deleveraging event that made the Nasdaq look like a stablecoin by comparison. Silver and gold even got dragged into the mud, dropping 38% and 12% below their cycle highs. The Nasdaq 100 tracker, QQQ, fell about 500 basis points over 3 sessions. It was like watching a global fire sale where even the fire extinguishers were being sold for parts. Jasper DeMare from Wintermute noted that institutional desks reported small but manageable liquidations. This suggests the actual stress in the system might be deeper than the numbers initially showed. In the options market, implied volatility spiked into the 99th percentile. People were rushing to buy put options for Ether, which DeMare called the epicenter of the pain. For Bitcoin, the smart money is now eyeing a massive range between $55,000 and $75,000. If we don't hold $55,000, the comment section is going to get very quiet very quickly. But why is the market depth so shallow lately? Keiko research shows that Bitcoin's average 1% market depth has fallen to $5 million. In 2025, that number was over $8 million, meaning price moves are getting way more abrupt. It's harder to trade large amounts without moving the needle, which adds to the turbulence. Adding to the bad news, Gemini announced it's shuttering operations in the UK, EU, and Australia. They are also cutting about 25% of their staff as part of a restructuring. Users in those regions are being moved to withdrawal-only mode or partnered with eToro. When an exchange starts packing its bags in 3 continents at once, people tend to get nervous. Then we have the spot Bitcoin ETFs, which have finally seen the honeymoon phase end. We've seen about $1.25 billion in net outflows over just 3 days. Jim Bianco from Bianco Research pointed out that the average ETF cost basis is near $90,000. That means current holders are sitting on roughly $15 billion in unrealized losses. This is what we call heavy bags, and they tend to discourage new buyers. Bianco actually suggested that since crypto is programmable money, BTC is trading like a software stock. This theory held water this week when software stocks took a massive tumble. Salesforce, Adobe, and ServiceNow lost between 8% and 13% of their value. This was largely triggered by Anthropic releasing a new AI automation tool for knowledge-focused workflows. Apparently, investors decided that AI might replace humans faster than Bitcoin can replace the dollar. Even Bithumb is having an identity crisis, ditching its Bitcoin company label to focus on AI infrastructure. Pivot to AI or perish seems to be the new corporate motto. Jonathan Krinsky from BTIG noted that Bitcoin has been highly correlated with these software stocks lately. He believes both might have put in tactical lows recently. He's looking at $60,000 as a key level to trade against. However, He warned that we need to see Bitcoin back above $73,000 to confirm a real recovery. That $73,000 level was the key breakdown point, and reclaiming it is essential for the bulls. I want to hear from you guys in the comments. Are you buying this tactical low, or are you waiting for $55,000? Let me know your strategy, or just leave an emoji if your portfolio is currently under witness protection. Interestingly, the Trump administration's pro-crypto stance is what pushed us to $125,000 last year. But the recent correction has been one of the sharpest sell-offs of the entire cycle. While retail traders are panicking, Bitwise CEO Hunter Horsley says institutions see this differently. He says longtime holders might feel unsure, but new institutional investors are getting a new crack at the apple. They are seeing price levels they thought they had permanently missed. It turns out, generational wealth just means buying the dip that institutional algorithms created for you. Retail participants, on the other hand, are busy meta-analyzing the market. Sentiment reports that retail is looking for signs of other people quitting before they jump back in. This behavior usually emerges right near the market bottom. Google Trends data shows that worldwide searches for Bitcoin hit a perfect score of 100 this week. That's the highest level in the past 12 months. Searches for crypto capitulation also surged from a score of 11 to 58. People are Googling capitulation like they're studying for a test they've already failed. Then we have the weirdest story of the week, Bithumb's $40 billion mistake. The exchange accidentally sent out thousands of BTC to users during a rewards event. They meant to send a small cash reward, but ended up distributing a fortune by mistake. They managed to recover 99.7% of it, but about 125 BTC is still missing. That's about $9 million just gone. If you woke up with 1,000 Bitcoin in your account this week, I hope you enjoyed the 5 minutes of being a billionaire. Bithumb says they will cover the losses with corporate funds, so don't worry about them. Finally, Jeff Park from ProCap Financial suggests the next bull catalyst might not be Fed rate cuts. He thinks the holy grail is Bitcoin rising even in a tightening interest rate environment. This would challenge everything we know about global liquidity. For now, Bitcoin is stabilizing above $71,400 after a week of extreme volatility. That's today's sprint done. Thank you everyone for watching. If you got value from this video, please feel free to subscribe and share the video with a loved one who may need it. I'm Stocks, and we'll see you on the next Stock Sprint. Have a nice day. Wow, you're still here. You must love the channel. Take a look at this video I think you would like, or you can just watch the latest upload.